Market update October 7th, 2025, brought to you by CBN Financial. Good evening, I'm your host bringing you tonight's market update, giving you the news and insights you need to help shape your investment decisions. US stocks cooled off today as the rally lost some steam. The S&P 500 dipped about 0.4%, the Dow Jones retreated roughly 0.2%, and the Nasdaq fell approximately 0.7%. The small cap Russell 2000 fared worse, dropping over 1%. The market's 7-day winning streak was snapped. The recent underperformance was led by Tesla, whose shares slid around 4% after unveiling more affordable models. Oracle also weighed on sentiment, declining over 2% amid concerns about profitability in its business. On the flip side, names tied to artificial intelligence and data infrastructure saw gains. IBM and Dell attracted renewed investor interest. One of the most eye-catching moves was in gold, which surged past $4,000 per ounce. That move underscores growing anxiety about inflation, geopolitical risk, and broader macro uncertainty. Some investors are treating gold as a hedge in an increasingly volatile environment. In fixed income, the 10-year U.S. Treasury yield slipped slightly to about 4.13% amid the equity pullback and renewed demand for safer assets. Meanwhile, broader market sentiment is closely monitoring the Federal Reserve's next moves. While Chair Powell has signaled a willingness to preemptively ease monetary policy if labor market conditions weaken, some analysts warn that rate cuts risk fueling further excesses in asset valuations. Also making headlines. Intercontinental Exchange ICE announced a bold new move, a $2 billion investment into Polymarket, and plans to become a distributor of its event-driven data. In the metals sector, Trilogy Metals saw a dramatic run after a road approval in Alaska, sending its shares much higher. Given today's market action, here are a few key ways and tactical considerations. Rotation and balance matters. The divergence between defensive assets, gold, treasuries, and high beta tech/trading names suggests the market is questioning sustainability. Focus on fundamentals and bets. The enthusiasm around is real, but not all names will survive the scrutiny. Favor companies with strong balance sheets, clear revenue models, and differentiated technology. Volatility is a friend, not a foe. Use dips as opportunities, but remain disciplined. Set entry points, plan your exits, and protect downside. Watch central bank cues and macro backdrop. Economic data will be sparse while the U.S. government remains in shutdown, so any Fed comments or geopolitical developments will carry outsized influence. Segment exposure. Blend core holdings with tactical satellite allocations, e.g., selective plays, gold hedges, resilient industrials, to balance upside and risk. Let me close with this. Amid a fast-moving market, stay nimble, question overhype narratives, and keep risk management front and center.